Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, April 17th. If you're walking around New York City this weekend, make sure to check out our new billboard up in Times Square thanks to our sponsorship with the New York Stock Exchange. I'm going to take a photo with it this weekend. If you take one as well, send it to me. I'm at akash@theinformation.com. I look forward to seeing it. I want to kick things off with a scoop that my colleagues Anisa Gardizi and Valita Pao published on Thursday. OpenAI has agreed to spend more than $20 billion to use chips from the chip company Cerebras over the next 3 years. That figure is double what was previously reported about the deal. In return, OpenAI is getting warrants in Cerebras with the potential to own up to 10% as its usage scales. OpenAI is also putting up about $1 billion to help finance the data centers that will run those chips. We've got that story up on our website. I encourage you to check it out. On today's show, we are unpacking the Information's latest scoop from our Asia Bureau about DeepSeek. We'll then discuss Netflix's quarterly results. We'll also dig into LinkedIn's booming AI product, which has become a bit of a bright light for parent company Microsoft. And we'll close out the show with our weekly edition of The Editor's Cut. Today, we're talking about the potential risks that Anthropic's Mythos may pose to financial systems and to society. It's going to be a fun show, so let's get right on into it. The Information's Asia Bureau, Channer Liu, Zheng Yang, and Juro Osawa published a big scoop about DeepSeek. I'm joined now by Juro to share more with us about what he learned. What have we learned, Juro, about DeepSeek?
Hi, Akash. So we just published an exclusive story, and DeepSeek is in talks to raise money for the first time. And DeepSeek has actually never raised outside capital before, so this will be a very big shift for the company. And we heard it's talking to multiple investors, and the talks are about raising at least $300 million. And the potential valuation more than $10 billion. It could be significantly higher than that as well. So yes, those are what we reported just now.
So why hasn't DeepSeek raised money in the past?
So it hasn't raised money in the past because it didn't have to. And so DeepSeek's parent company is a very prominent Chinese hedge fund, quantitative fund. And the money from the fund has, been able to provide the capital that DeepSeek needed. And also the DeepSeek founder has been, his preference has been to really operate without the outside money, to really focus on the research. And this company was really built around a culture that's much more like an academic lab than an enterprise. So, over the years, that has worked really well. And, so this is that's why, this really comes as a pretty big shift for the company.
And so what has changed? Have DeepSeek's models gotten less competitive? Does it need the capital to invest in compute and hiring researchers? I mean, what's going on?
So, yes, multiple factors. I think so. One is definitely computing cost to keep competing at the highest level and really try to keep developing the frontier models. So the cost of doing that is one thing, and then also DeepSeek has had some departures of key researchers, and quite recently as well. There's one researcher who left and went to ByteDance, the other Chinese competitor, and in those cases, the competitors are paying a lot more money to hire those people. So having raising more money, outside money, can also help DeepSeek retain talent, or just hold on to that top research talent.
And remind us, what is the latest model that DeepSeek has on the market right now? How good is it? Just remind us there.
So yes, DeepSeek, obviously the big hit that they had was more than a year ago when they released R1, the reasoning model that really, changed the world. And since then, they have had some updates. So they they've released several updates to another model called V3, and then the next generation model is we've reported previously, but they have been working on it, and they're preparing to release it, so it should be coming soon. But that really will be the a completely new generation model. So basically, over the past year, DeepSeek has some updates and also has published some influential papers. But the real complete update and the new generation model, hasn't really come. And obviously, a lot of people have been waiting for this moment. And so
So
trying
we're waiting for V4. V4 is what we're
before.
sort of
That's
waiting
right.
for.
Yes.
Okay.
Yes.
One question I had for you, Juro, is as this company seeks to raise this capital, I mean, I think we all know the story of it. It was a hedge fund before, and I mean, I guess if you, I was wondering if you have any sense for like how the structure of the company has changed or could change. I mean, are they still making most of their money from the hedge fund side of the business? Is that still very much alive and running, or has the shape of the company changed entirely to now become maybe closer to what an OpenAI is or an Anthropic is.
So I think the shape of the company hasn't really changed, but I think the environment has changed a lot over the past year, and especially the competitive environment. So when DeepSeek had the big hit R1 at the beginning of 2025, the market looked very different, and they really became this like a new open source model that was really competitive. But then since then, a lot of other companies, especially other Chinese companies, really came up with new, open source models of their own that, also gradually became more competitive as well. So, the market now has a lot more kind of options, and so that is something that DeepSeek itself as a company and a team may not have changed fundamentally, but the environment that it's operating in has really changed.
And last question for you, Juro. I imagine DeepSeek is a pretty hot commodity for investors, given all of the traction it's been able to get, at least at certain points. Do we have any sense for how competitive this process is in terms of venture capitalists getting into this round, or even do we know who is bidding to get into the round?
I think a lot of the details will be, we will try to find out more for the next story. But we have heard that, they are talking to multiple investors, and obviously there is a lot of interest. And, China has had some very successful IPOs of AI model companies in Hong Kong over the past, earlier this year, especially like a Minimax, Jupu. Those are the two model companies that already went public. So for investors, if there's any chance to get into this market, especially, a very prominent player like DeepSeek. So if there is a chance for outside investors to get in, there will be a lot of interest.
Great. Well, Juro, I want to thank you for coming on. That is Juro Osawa, our Asia reporter here at The Information. Netflix reported 16% revenue growth in its first quarter, slightly above projections, but the company is projecting a slightly slower full year growth this year compared to last year. Shares are falling in the aftermath. I want to break down the results with Barton Crockett, Managing Director and Senior Research Analyst at Rosenblatt Securities. Barton, welcome to the show. It's great to have you here.
Great. Thanks. Really happy to be here. Love the information and really excited to be on the show with you today.
What stood out to you from the quarterly results yesterday?
Well, look, I mean, we have a neutral rating on Netflix, and I think that this report was a report that it shouldn't prompt anyone to dramatically rethink their view of the company. A little bit of upside in the first quarter, a little bit of weakness versus expectations for the second quarter, maintaining the full year guide. The setup with Netflix, we think, is this is a great company that has a stock that already reflects that. I mean, the company is trading at about 24 times enterprise value to EBITDA. We think they're growing their EBITDA at about a 24% CAGR, last year to next year, with margin expansion on mid-teens revenue growth. And that's not really a crazy price for the stock to be trading at. So look, if it got a lot cheaper, again, let's say they decided to make a run at some other media conglomerate and then back off, look for entry points. But I don't think there's any reason that you need to rush into it today, right here.
So I want to talk to you about the valuation, about the multiple, because
Mhm.
the quarterly results showed that growth seems to be slowing gradually. We're not sure what's going to happen past this year, but I mean, the company, if you look at the multiple, it's trading well above what other slow-growing TV companies, older media companies are trading at, and it sort of prompted the question in our newsroom, at least, if Netflix starts to slow and it starts to look a little bit closer to what an older TV media company looks like, I mean, shouldn't the multiple follow suit? What do you think?
Well, it would. I mean, to be clear, they're going a heck of a lot faster than traditional media companies are right now. I mean, there's Disney, whatever the Paramount Skydance combination it looks like. Um, they're not growing EBITDA at 24% CAGR, nothing close to that. I think they're happy with, maybe low, high single digit, low double digit growth in the case of Disney, mostly driven by theme parks and Paramount, Warner Brothers, whatever that's going to be called. I mean, who knows what happens there? But so they're not there yet. And so the question is that where they're going? And look, if you continue to see the revenue growth decelerate tick after tick after tick, yeah. And that's a little bit of our concern, is that this is a company that looks like it might be on kind of a maturing arc. And what we've seen is, maturing media companies, perhaps with a cloud of some secular threat around them, can be stocks where you play kind of valuation limbo, which is how low can you go? And for a decade plus, people were, really just besides themselves with how cheap Paramount was and how cheap some of the other media companies were. But then they ended up, being right. The market was predicting kind of secular demise. Netflix is making the argument that that's, nothing could be further from the truth for them. They talk about a $670 billion total addressable market between what people pay for subscription television and streaming, and what what you see in terms of advertising on those platforms and spending on video games by the consumer outside of Russia and China, and that they're only thinly penetrated at 7%, and they can grow that penetration. And I think that they're right to look at the addressable market. I think they're right to think that they can play in those spaces over time. But mid-teens to low double-digit growth does not argue that you're really, taking your total addressable market by storm. So, there's a little bit of concern around that. And at this point, we're sticking with the neutral because, we think it's slightly better than, it's much better than the media companies. And, for now, we're kind of sit here.
Okay, so now you talked about the total addressable market. Let's talk about the advertising market
Yeah.
specifically. I mean, how big a business do you think advertising could be for Netflix? Not just given the dynamics of advertising altogether, but all the competition that Netflix sees from other streaming platforms, YouTube, and
Mhm.
and you've certainly got newer technologies that they could spend on too. Talk about it.
Yeah. Yeah. So, I mean, they're doubling their ad revenue this year to 3 billion, off, a relatively kind of modest portion of our overall sales, 6% this year. They talk about an ambition of 10%, which certainly, they're on a path to kind of get there within, a year or two. And then we'll see after that. Once you get above 10%, then you start to really move the needle on total revenue growth. Look, they've got a billion audience if you count not just subscribers but those co-viewing, and the opportunity to monetize a billion viewers, watching your service for nearly 2 hours a day or so, is really great. But this stuff doesn't happen instantly. I mean, you have to invest in the tools, you have to invest in the relationships, you have to invest in time, basically, in building a relationship with marketers in this type of area. So yeah, that would be kind of the upside argument that would, separate them from the rest of traditional media that doesn't have this type of scale. But look, the ad market is going through a lot of flux. I mean, OpenAI is talking about going to, $100 billion. I think you guys were reporting in a few
2.4 this year. 2.4 this year.
yeah, but 100 billion by like 2030 is
Right,
what you
right.
guys, that was the reporting. 2.4 billion this year off of, basically nothing last year. And, those goals sound kind of like a stretch. I mean, I'm not really banking on open AI kind of hitting that stuff, but if they're successful, I mean, there could be a sucking sound of advertising from other categories that could be a headwind for many players, maybe including Netflix.
So just to go back to it, so what is your projection for how big the ad business could be for Netflix 2 to 3 years out? Have you put a number on it?
Yeah, we've got numbers. I mean, I'd have to check in my model to give you the specific numbers, but leaving that aside, the direction is really doubling to high. It's a curve of kind of general kind of deceleration
Right,
that we're modeling, and
right,
law of large numbers gets bigger, bigger base slower, but crosses 10% of sales within a couple of years,
right.
and continues to grow from there. So once you're above 10% of sales, that moves the needle, and maybe you can see revenue growth reaccelerate. And that might be kind of the longer term story. We're a couple of years away from that really being visible in the consolidated numbers.
Now, very quickly, you talked about the user base. Netflix insists that pricing changes won't have any impact on membership numbers. Do you believe that?
Yeah, I mean, we kind of have to believe it because they don't give us any numbers. So, I have what they tell us, but I don't have the numbers. They're not reporting that anymore. Um, in the past, they've had a lot of pricing leverage. Generally, I mean, there have been quarters when they've, early on when they were, whipsawed by price changes, but they've learned how to navigate that much more subtly over time. And the more recent trend when they were giving us numbers is they could raise prices and grow subs pretty successfully, that they had pretty good pricing leverage. And so if they're telling us that the US price hike of, 10% plus effective, that people are absorbing that in an environment where everything's going up in price and it's not going up as much as your gas bill, maybe I can believe that.
Right. Because I mean, I guess the candid concern you could say investors might have is, okay, revenue growth is decelerating, prices are coming up. To what extent is the revenue growth coming from the price increase as opposed to getting more people on the platform? Once you get into that game, how high can you raise the price? I mean, there is one way of thinking about it that, hey, this is sort of it's a tough narrative to get around. On the other hand, like you said, there is leverage.
Yeah, there's pricing leverage. Clearly, the long term exit from that doom loop you just laid out is advertising. If they're able to grow advertising
Right.
at an elevated pace for a long time, bam, there's your answer.
Right. Let me ask you one more question here. Looking at the newer bets that Netflix is
Mhm.
making with sports, with gaming, and I guess video podcast is the most recent one. So maybe let's start with gaming because
Yeah.
that's one they've leaned more into. If you were to give a letter grade to each of these pursuits, and there's a number of ways we could rank them, but I'm sort of asking you based on like execution and yeah, how well you think their Netflix is doing, in each of these categories. So let's start with gaming. What letter grade would you give them there?
I give them a B. I think that gaming is just a very long term play. It's I think meaningfully a retention play. They launched this new kind of playground kind of setup for targeted at kids on their iPads and iPhones, and that makes a ton of sense. And I think is one other reason that parents are not going to cancel Netflix, and because that's your babysitter right there. But I think that they have a CFO who comes from the gaming industry, and I think there's a lot of kind of hopes that over time this can be a content form factor that is a really kind of big part of consumption right now. I think it's It's kind of on the periphery, but the nice thing is, if you get a hit in games, that's can be really durable, right? And if they're able to get their hit, whatever that is, maybe leaning off, playing off of, their hit content, games around that, maybe something else that they come up with, there's real option value there, and it could, quickly go to an A plus if, they find that hit.
Okay, I think that's a great point. By the way, what about sports?
Sports, I give them an A plus. I mean, they've just broken all the rules in sports and won, which is amazing. I mean, they went up to the NFL, and who tells the NFL anything? Who pushes the NFL around? Netflix does. They said to the NFL, we don't want to have all your regular season games. We just want big spectacles, um, and carve that out of all of the oodles of cash that your media partners are paying you, and give them to us. And Netflix said, sure, Dad. So yeah, I mean, it's incredible what they've done with that, what they did with, these spectacle events like Mike Tyson, which, was hard to watch, but a lot of people watched it, set records. And, they're doing this differently. Nobody makes money in sports except Netflix, because they're just taking what works and leaving aside, the wait for others. And, I applaud them. It's really amazing what they've been able to do.
Okay, and last one, how about the video podcast play?
The video podcast play is still, I think it's too early to give them a grade. Um, I'd say a midterm, and I'd say the midterm grade, we're kind of, early into it, is an A minus maybe. I think that they are, they're talking about 10% of their user base kind of sampling it. They've are using the video podcast to get into a more mobile kind of cohort. They haven't really been much of a player on mobile phones. You sit in front of your TV, but on the podcast, people are listening to it when they're out and about. That's important, right? If you think about this TAM, you want to be able to go off of the big screen that's, on the couch, in the mobile world where so much media consumption is happening now, and this really starts to get them there.
Well, I was reading a column that my former colleague, who now writes a column at Scalable, put out about
Mhm.
the Netflix podcasting pursuits, and the point that she made is that less of an impact on Netflix, more of an impact on the shows themselves. I mean, some of these
Mhm.
shows that have given the rights or access to Netflix to air their content. I mean, it's pretty staggering how they've seen traffic in other channels drop, and I'm
Yeah.
thinking of a very popular hockey podcast, Spittin' Chicklets. I
Mhm.
mean, the stats are quite staggering insofar as how they've seen um, traffic just go all to Netflix, and
Yeah.
it is quite staggering, I think, to think about the power that Netflix has when they go all in on these pursuits.
Yeah, and look, I mean, there's a check that covers that traffic loss, and Netflix will have to write that check because people will understand. And Netflix understands. I mean, if there's advantaged access on Netflix, maybe get the full video there and not elsewhere. That the audience will follow you there. So, yeah, but they can write those checks because they've got the business to support it, and the content, line that's just going to be an insignificant kind of rounding error that can move from one bucket to the other for that podcast. So, podcasters, I think, like the idea of certainty, right? You get that big check. You don't have to worry too much. Just kick back, enjoy it, and talk on your podcast.
Great. Well, Barton, I want to thank you for coming on. That is Barton Crockett from Rosenblatt Securities here on TIT. As Microsoft tries to get enterprises to adopt its core AI products, LinkedIn, which is owned by Microsoft, has itself surprisingly seen extraordinary uptake for its AI products. My colleagues Aaron Holmes and Laura Bratton wrote about that in our Applied AI newsletter. I want to bring on Aaron to share with us more about what he knows. Aaron, welcome back to the show. It's great to have you here.
Happy to be here.
What is going on at LinkedIn?
So, LinkedIn has this AI agent product that only came out a few months ago, but has kind of become a surprise hit for Microsoft when it comes to generating revenue by selling AI tools to businesses. And specifically, this is a sort of recruiter AI agent that they call hiring assistant that basically you can just tell the AI, in natural language, I'm looking for a job candidate for X, Y, and Z role, and it will automatically, search through LinkedIn system for you and find a small number of candidates. And it's not cheap. It costs, several $100s, in some cases over $1,000 per seat per month. But I am told that, businesses have been spending pretty significantly on this tool, and other departments at Microsoft have taken note of the success of this tool specifically.
So look, I think the product itself. I haven't used it, at least not knowingly. Maybe it's more meant for recruiters, but I think it was pretty obvious that you know the data that LinkedIn is sitting on and the convenience that AI can offer. I mean, it seemed like an obvious product. Let's get to the business impact. Do we know anything about how much revenue this is generating for LinkedIn? And also, you spoke with the chief business officer. What did you glean from that conversation?
Yeah, so I don't know the total revenue. I do know that it is seen as significant, and I'm told that it's possible Microsoft will even give shareholders some sense of sales during their upcoming earnings call, which is in a couple of weeks. But what I do know is that that the LinkedIn chief business officer told me that the number of customers using this tool has grown by around 30% every single week since it launched in September. And they also are tracking the fact that people who have paid for the tool are using it more and more, which is notable because, in the past, Microsoft has internally worried a little bit about how much people are paying for Copilot and then actually using the tool after they pay for it. So that retention is an important metric for them.
Now, this could be a stretch, but can we glean anything from Microsoft's AI strategy from how LinkedIn is using AI? And I ask that because one of the things you pointed out is that the CEO of LinkedIn got a promotion and is now overseeing a lot more at Microsoft, right?
Yeah, that's right. Ryan Roslansky, who has been the CEO of LinkedIn for several years, last year got a promotion to also serve as an executive vice president of Office 365 products. And in that role, he is now overseeing some amount of the development of 365 Copilot, which is Microsoft's sort of flagship AI product that it's trying to convince businesses to spend money on. And yeah, I mean, the reason that I originally started looking into this LinkedIn tool is because I was hearing from other executives at Microsoft, as were some of my colleagues, who were saying like this specific AI agent from LinkedIn is seen as a success internally, and other teams working on Copilot were sort of studying what worked with this LinkedIn product and trying to take away lessons to improve Copilot.
Great. Well, Aaron, I want to thank you for coming on. That is Aaron Holmes, our Microsoft reporter here at The Information. This week on The Editor's Cut, we want to talk a little bit about Anthropic's dangerously good model, Claude Mythos. The long-term repercussions of that technology have come up lately in discussions that our editors have been having, and so I want to bring on Martin Pierce and Meredith Mazzelli to walk us through their thoughts on all of this. Martin and Meredith, welcome back to the show. It's great to have you both. Martin, I want to start with you. What do you think of Mythos? What's been percolating in the mind of Martin Pierce around Mythos lately?
I am rather concerned that I'm going to wake up one day and my bank account will have zeros in it, not because I've spent too much, but because some hacker has used Mythos. They've gotten access to it and they have used it and they have taken the money out of everybody's accounts. And that is making me wonder, should I be converting some of the money I've got in the bank into gold, or should I be going to the ATM and withdrawing large amounts of uh, currency just in case this happens? It's just weighing on me this morning. I was thinking, should I alert my family and friends to this? Are we really paying attention to what could happen?
Okay. I wish I I
I'm
kind
a
of wish.
little concerned that we're so used to the big AI doom, scenarios that we're not actually taking the notice of something that could really happen.
So, Martin, you are like the most skeptical person that I know. Why are you so scared about this? I feel like we're really getting ahead of
Because
ourselves here.
I don't want to be left bankrupt. I do
Well,
not want to not have any, I don't want to wake up one day and not have any money to buy food or or whatever. That just freaks me out. And because I'm skeptical of the people who are skeptical.
Okay.
So when I brought this up, Amir was like, "Yeah, don't worry about it." I'm like, "Man, I'm skeptical. I think this is a real concern."
Yeah. I mean, look, at a high level, I do think that AI helps bad people do bad things more efficiently, just better. But I'm not really clear what the fear on Mythos specifically is. I know, you know, Treasury and Fed officials met with bank CEOs to talk about it. That sounds super scary, but I mean, that's kind of the Fed and the Treasury's job, is to get ahead of potential emerging risks, not, we're not talking about a live hack here. We're not talking about dollars coming out of bank accounts. And I think that's actually evidence that the system is working as it should. If this model even is that powerful, the banks are getting it early. The regulators are aware and in contact with the banks. And yeah, I'm just not really clear why we should be so scared.
So Martin, is your concern, Martin, that this is this is going to get out there essentially beyond what Anthropic has already given?
Absolutely. I think the idea that they can make this model available to 40 different organizations, and they're going to be able to ensure that that doesn't get out to some bad person, is zero. So therefore, when that bad person gets this, they could really destroy the country. And I'm just worried that we're all assuming everything will be fine. I mean, the risk of ignoring this is so enormous that I don't really understand why I'm the only person who's for freaking out about it.
Right, but the banks aren't ignoring it, and the regulators aren't
I
ignoring it
don't
if
know
the
that
banks
they're
have it
not ignoring it.
early. Yeah,
Well, you know what?
yeah.
The banks are actually, are they doing anything about it?
We don't know. I mean, we don't know, if it actually does what Anthropic says it does. They say that they're doing early testing, working with cybersecurity partners, things like that. I will say the bigger risk to the financial system is if everybody freaks out and pulls their money out because they think banks are about to get hacked. That's how you actually destroy a financial
That
system.
is true, but
So Martin, she's saying
It's
you're the
hard to
pro.
think.
She's saying you're the problem.
if I withdraw today, I will get ahead of that. So
Okay.
that is the smart play.
Right. But speaking of getting ahead, the idea of this limited rollout in Anthropic's telling is that the banks and everybody get our super scary model, right? Like they learn how to build their defenses and they have the jump start on the bad guys. And we're being so nice. We're limiting it outside these certain firms, and they're going to be ready for whatever bad thing happens. And so you don't think that, yeah.
That sounds like such a nice scenario. I really hope you are right, but I have a bad feeling.
Okay, let me propose something here, Martin. I mean, I would submit to you that I think of all the companies that could have come up with this model, I think Anthropic. I mean, you could say, thank God Anthropic was the one to come up with the model because they have shown that they are at least showing some responsibility for this.
That's true. So
Right. But then at the same time, we did a story this week about, crypto firms that are wanting to get access to these models. And unlike the banks, they're not being given that access, so they say. And, there are parts of the money, not the traditional financial system, but that are being left like to fend for themselves at this point. So,
somebody has gotten access that was not meant to, and things will get bad. But that's just me.
Well, and okay, so here's
After this segment. I'm headed to the bank to
okay.
my money.
I would love to follow you there. We can do some on the ground coverage of Martin at the bank.
GoPro, yeah.
But I mean, this is an interesting point, Meredith, you brought up. So the crypto companies are trying to get access to it. Do we think that crypto companies should get access to it? That's something that I've been wondering.
Oh. No,
But there's a lot of fraud that happens. I mean, they're trying to fight back against fraud, right?
I mean, this kind of comes back to my other, I guess, point about the AI risks is that a lot of the risks that are real for the financial system aren't about hacking into some like complex system. It's about using AI to impersonate people or to do phishing attacks at a large scale and like tricking people, just doing old school type fraud at a larger scale. And I think we mentioned this in the crypto story as well, that yes, there have been a lot of high profile crypto breaches in the past, even before more advanced AI, but those tend to be social engineering, tricking people basically at the end of the day.
Great. Well, Martin, any closing thoughts here before you head to the bank?
I'm just withdrawing all the cash that I can.
Okay.
Right.
All right. Well, I want to thank you
Keep
both for
mine in
coming
the
on.
bank. Yeah.
Say it again.
I'm keeping my money in the bank.
There you go.
Oh, can I just say that when the day comes, don't come crawling to me. Answer that.
All right.
Okay. Well, you're my boss, so. All right. I want to thank you both for coming on. That is Martin Pierce, our co-executive editor, and Meredith Mazzilli, our most fun editor. And see you later. I'll
Bye.
talk to you guys soon. Okay, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media on X, Instagram, and TikTok. I am already excited for our next show on Monday. Have a great Friday. Have a great rest of your weekend. Bye-bye for now.